What's up, weirdos? What's going on, guys? Good afternoon. Bitcoin plummeting, dropping like a stone in water. Check that out. Boom. Now, I was of the mind that we could have come back up and seen a rejection off 84. That has not taken place. We are continuing to work our way down towards the previous cycle high at $69,000. Let's zoom out a little bit here. Where are we? We've passed down below from back in April. So right now, yeah, there's not really much support, guys. That's the thing. A little bit right here was resistance, but there's not much support where we are right now, to be honest with you. I think we're coming down to 69K, guys, right? But to be fair, I have been telling you guys for over 2 months to accumulate stable coins. Do not buy altcoins. I've been telling you that, right? Hopefully you guys were listening. But there's still more downside to go. Let's get into the chat, see what's going on out there, see how the sentiment is in the market. I know that a lot of you guys are actually not feeling too bad because you knew that this was coming. So a lot of you are chill. A lot of you guys are actually feeling good because you've been accumulating stable coins, getting ready for these moves, right? So keep up the good work, guys. Keep up the good work. Let's go downtown, baby. Blessings, John. Good to see you. I smashed the like first. There you go. Thank you so much. Ken, what's up, buddy? Good to see you, man. Passenger says Trump is killing the market. I don't know. Did anything I don't think anything happened with him today. H. Barbarine in the house. What's going on, man? Rise above. Cheers. What's going on, man? Down we go. Let's go, baby. Let's go to buy the low. G-Dog says Zebek looks juicy. Oh, yes, it does. Yes, it does. Jackie, crypto feels dead. Jackie, it's not dead. Come on now. We're going down, but we knew this was coming. We've been preparing for it for about 2.5 months. And there's still more downside to go. A bear market always makes crypto feel dead until it recovers. And then it doesn't feel so dead anymore, right? If the 4-year cycle was perfectly executed, then when altcoin season? Passenger, I appreciate your spunk, but the 4-year cycle has nothing to do with altcoins. The 4-year cycle is solely based on Bitcoin. The 4-year cycle began in the genesis of the first Bitcoin block. No altcoins even existed for at least a few years after the first genesis block for Bitcoin. So the 4-year cycle revolves around Bitcoin, has nothing to do with altcoins. Quentin, what's up, brother? Good to see you, man. And the chaos continues. Yeah, I mean, listen, I'm seeing a lot of that, Chase. But here's the thing. What's the implication is what I'm trying to wrap my mind around, right? Now, listen, I'm open-minded to anything, and that could be the case, and I would not deny it. However, it seems awfully convenient with them trying to push the price of Bitcoin and crypto down and trying to convince retail not to buy it right now, that they would come out with something like that, which would make retail not want to touch it, right? Kind of convenient. I don't know. And plus, even if, let's just for the sake of argument say that he was, right, Satoshi, what does that mean? Does that mean you're not going to, does that mean that nobody should buy Bitcoin? I mean, Bitcoin doesn't have anything to do with him or his life or what he was doing with in his other extracurricular activities. I can't talk about it specifically on YouTube, obviously, but so I'm not really getting the implication that's going around. Like, what are people implying that? How are people implying we should handle that situation? I guess is the question, right? Guys, make sure you hit the like and subscribe on the way in. It's absolutely free to do, and it helps the channel. There is 103 people watching, 27 likes. Not bad, guys, but we can do better. Let's go, baby. Let's go. DH says, Rob, are we dropping faster than you expected? And if so, does that mean we have further to go? Like maybe we're dropping at a pace that I did expect, actually. That's why I've been saying it for so long that we were going down. But what I would say is 30 is a little bit too low. I think around 40 would be my bottom, like the lowest I'd be willing to guess we would go. But we have to fall through a couple of significant support levels to even get that low. We'd have to fall through $69,000, which is the previous cycle high. That's going to be a pretty strong support level. We got to pass through. We got to pass through the CME gap, which is currently at about $57,900. Is CME gap? Sorry, the 200-week moving average. I mean, we got to. That has to fail as support as well. So there are some significant levels of support below us that we do have to lose to get to 40K. But do I think it's possible? Yes, I do think it's possible. But we'll see what happens with 69 and 57 first, right? It's hard resisting the urge to DC into Zebek, waiting for that market bottom. I know. It's hard to not try to catch that falling knife, right? It's like, I want to buy right now, but it's just not time yet because there's more downside to go, right? But I'm with you, man. Believe me, I'm with you. I'm sitting on the sidelines too going, man, I would love to just start buying everything, but I know that the prices are going to go down further, so I'm not playing that game. Loading up on stablecoin, release the hounds, baby. With the price points not getting hit by altcoins, are we going to have to wait? No, we're already more than almost half. We're about halfway through the first year already of the next cycle. The cycle started the day after Bitcoin topped and started working its way down back in October. So, Dave, what's up, man? Good to see you, man. Good to see you. Any reason for the drop? Just chart action, man. Just low liquidity and the the natural progression of going down towards our bear market bottom. Brandon says, do you think we reach previous cycle highs or the 200-week moving average faster than expected? Well, we're almost at the previous cycle high now, right? It's like 69,700 or something like that was the previous cycle high. So, I mean, we're not too far off of that now. Ditto, what's up, man? If we went to 69 quickly, is it possible that means that we start climbing sooner? I mean, anything is possible, yes, but I think that we're probably, if we drop down to 69, right? I think that it's going to take us a few tries to drop below there. I think it's going to bounce off there a few times. It should. It's the previous cycle high, which is going to be a significant psychological level. So, Wendy, what's up? What's up? Smash that like. Yes. Jack says, is it weird the government shutdown is a lot more quiet, less media? I think maybe because it's only a partial shutdown, possibly. I think. Plus, they keep saying they're also expecting faster resolution than the last time. So, I mean, you bring up a good point. It is kind of weird that it's not like front page news, right? What do you think about ZBEC? How much lower do you think it will go? 90 to 95% down from its high of the cycle. Carl, what's going on, man? Crypto's pulling back further. Yes, it is. We have any chart patterns on silver? You see anything to look for? I can have a look at silver. We are silver. A little moist for you there. Aging myself a little bit. Little 90s rock. All right, looking at silver. I mean, we caught support, obviously, right around that $78.99, almost $79, right, give or take. Now, the bottom of this golden pocket that I put in is acting as resistance around $90. I'm not seeing anything yet that screams, you know, I mean, we could go to the lower time frames and see what's progressing there. Let's go to the 4-hour. Yeah, see, I was afraid of that. It does look like we are forming a bit of a bear flag on silver, right? We are forming a bear flag on silver, which is going to drop us down significantly once we drop out of this. I mean, from the top, you could have a drop on silver all the way back down to around that $40 range. Man, I would be scooping it up. So yeah, if you notice, if we go back, when I was looking at the daily, right? If you look at the daily, it kind of looks like on the daily time frame we're starting to form that bear flag, but we're only 2 days into it, right? So, but yeah, on the 4-hour and the lower time frames, we are most definitely forming a bear flag. So, yeah, that's looking bearish on silver, so could see some more downside. We get down around $40, I'll tell you, 50, 55, I'll start scooping it up. What do we got here? Derek says, what's up, man? Do you think it's a good idea to buy BTC or just stick to stable coins? Well, I mean, I just stick to buying stable coins right now, to be honest with you. Paul, nice to see you, brother. Nice to see you. So you can see ZBEC. I see ZBEC hitting 90, like I already said, 90 to 95% from this cycle's all-time high, right? Watching CNBC, there's a couple of votes away from starting the shutdown being over. There you go. No problem, man. Back to truck up. Yes, I agree. Kizza, what's up, buddy? This is all happening rather fast, isn't it? It is actually, Kizza. Good point. Yes, it actually is. And maybe that's a good thing. Maybe that's a good thing. It is happening rather quick. ZBEC goes back down to 307. I'll reach my goal of 20 million. Oh, hell yeah. Can I get a hell yeah to that, man? 100%. I'm with you, man. I'm with you. All right, we are caught up in the chat. Let's get into the news. Let's see what's going on around the crypto space today, guys. So Binance and CZ, wow, they are taking a hit, guys. Check this out. Breaking news as Binance is experiencing a withdrawal crisis. On data, On-chain data and market trackers show Binance has seen billions of dollars of assets withdrawn in a short period, including stablecoins like USDT, as well as other major cryptos, indicating capital moving off the exchange rather than rotating internally. CZ and Binance are causing a bank run with their fraudulent activities. So basically what this means, guys, is that with the news coming out and the evidence coming out that Binance was indeed responsible largely for the October 10th market crash and the continuous market manipulation and liquidation of their own customers trading, people are leaving Binance in droves, and we need to continue this. Binance has proven they are not a good actor in the space. They're not trustworthy with our assets, and we need to make sure that they are no longer the largest exchange in the space, because if they're no longer the largest exchange in the space, they no longer have that much power over the markets, right? So I like this. I'm happy about it. We need to see continued withdrawals from Binance. We need to boycott Binance. They are largely, I would say they're about 70% responsible for the October 10th collapse, okay? Which caused us to start falling into this downward pattern in the first place. So, yes. So it needs to continue. Personally, guys, I prefer to use BTCC. That is obviously one of our channel sponsors. I do my trading over there. I do my spot buying over there. Super fantastic exchange. Use our link down below. Get a great deal, guys. I left Binance a year ago. They're terrible. Yes, I agree. I agree 100%. They also like to freeze your trading, your ability to trade whenever the market's pumping too. I agree about Binance, but most exchanges are CCP linked. Yeah, true enough. 90% of ZBEX high at 207 and 2063. There you go. 3 zeros. I knew what you meant. By the way, speaking of BTCC and exchanges, guys, just so you know, I was going to be going to Bitcoin Las Vegas, right? You guys know that. I was going to be there for that. However, BTCC Exchange has asked me to join them, representing them in Dubai in April at the same time as the Las Vegas Bitcoin conference. So I will be representing BTCC at Token 2049 in Dubai in April. I'll be there for about 9 days, I think. And yeah, I will be stopping at all the booths. I've already reached out to ZBEC to ask if they're going to have a booth set up there. They told me right now it is kind of loosely planned that ZBEC will be at Token 2049. So I will be going up to their booth for a brief interview with them. So you're going to want to stay tuned for that. And so much more. So yes, I will be in Dubai for the Token 2049 representing BTCC. Candyman says, this morning I coughed up a pawn, a bishop, and a rook. I must have a chest infection. Well played, sir. Well played. I miss your jokes, brother. I miss your jokes. What else is going on around the space? We got some bullish Jasmy stuff. So check it out, guys. Jasmy Exchange presence continues to expand, strengthening its growing ecosystem. Biconomy will launch a Jasmy USDC spot trading pair on February 3rd. So another new listing for Jasmy on another major centralized exchange. You love to see it. And I'm going to pair that with this article that we have. If you didn't watch my video covering Jasmy Swap, we're going to talk about it. This is my first time hearing you, but congrats either way. Hey, thank you so much. And thanks for being here, man. Thanks for being here. Make sure you hit the like and subscribe. We love having you here. Johnny, I'm getting a second chance at getting a really good position. Exactly. That is a fantastic way to look at it, Johnny. Imagine the prices that we're all going to be able to buy in at. Man, it just makes me excited thinking about it, man. Rise Above says, Dubai, congrats. Oh, thank you so much, man. Johnny's going to go way lower. Yes, it is. Absolutely. Technical, 90% down from ZBEC is 3075. Sorry. Man, your math is all over the place today, Miller Mountain. Let's get into this article about Jasmy Chain, guys. Jasmy Chain got its first independent DEX, and nobody saw it coming. Well, me and Max saw it coming because we talked about it, but Jasmy Swap, a third-party decentralized exchange protocol, has officially begun operations on Jasmy Chain, marking the first major independent application built on the Ethereum-compatible Layer 2 network. Jasmy Labs Inc., the company behind Jasmy Chain, announced the launch as a development example showing how external developers can leverage the blockchain open infrastructure to deploy services without centralized control. Now, I will also remind you briefly, guys, that Jasmy Coin is the utility and gas token of the Jasmy mainnet, which means that to do swaps and stuff like that, you have to use what? Jasmy Coin. So we have more utility. You'll love to see it. Jasmy Swap operates as a decentralized exchange protocol on Jasmy Chain using smart contracts to automatically execute digital asset swaps according to programmed logic. The platform functions independently from Jasmy Labs Inc., representing the type of autonomous project development that blockchain networks aim to foster. So completely decentralized, nobody has control over the swap. Chris, good to see you, buddy. Good to see you, my guy. The exchange implements several technical characteristics common to decentralized trading platforms: on-chain transaction execution transparency, non-custodial wallet design allowing users to maintain asset control, and expanded token utility across the Jasmy network. Now, I'm not going to bore you guys by going through the entire thing. I just wanted to raise some eyebrows with this fantastic news about Jasmy Chain and the launch of Jasmy Swap. Now, someone had said in the comment section of the video I made covering Jasmy Swap, saying, "Oh, they don't need a DEX." Yes, they do. Every ecosystem has a DEX. Is it like that's like saying Ethereum and Solana don't need DEXs? Oh, what's the point in having a DEX on Ethereum or Solana, right? Same thing. It's idiotic to say that, right? But bias will do that to people. So anyway, let's continue on. Let's go over to Squawk Box for a little clippy clip, guys. RBC's Amy Wu Silverman on what options say about equities. So let's check what's going on the market.
Amy Wu Silverman, head of derivative strategy at RBC Capital Markets. And we definitely probably will focus on equities as we always do. But one of the things you said in one of your previous appearances, and I'm trying to figure out why you thought it was going to happen, but there was going to be some over-the-top derivative-based movement in some sector, and
unexpected sector.
Some unexpected. It just was like out of control that we've never. And I think silver and I guess even gold fits that bill. You didn't know it was going to be metals, but it happened.
Yeah, I think I had said healthcare, which, the year is still young. It was one of our predictions of volatility in 2026. Some people argue with me. They're like, well, Amy, this one wasn't unexpected in terms of the commodities complex. But the reason we talked about it, and I said it, was this has become a footprint of retail and has become a footprint of options trading where you just don't have this normal market anymore. Everything becomes this call exuberance, this chase. We're actually, I think, the 6th-year anniversary of the meme frenzy. And when you look at the indicators of the spot up, volatility up, the chase and the call options, it looks exactly like that. It just happened to be in a different industry. I think this continues because that is how retail folks trade: the FOMO, the MOMO, and the YOLO, Joe.
Whoa. The FOMO, the MOMO, and the YOLO. And I was just listening to you thinking what caused it. It's social media, Reddit, obviously. Then I was thinking about Steve Leisman 5 minutes ago was talking about the size of the Fed's balance sheet. And it's not really, you can't, there's been no experiment in shrinking it. Well, there's been an experiment in blowing it out and to where we are right now. And we see that experiment every day and what's happening. That's why people think that it could be different with wars. And some of this activity that you're talking about would be harder to orchestrate if there wasn't so much money sloshing around.
I think that's always a function of it. And then, look, I don't want to characterize it as completely froth driven. I think that's always the icing on the cake.
You said that gold and silver had good reasons. Not okay. Central bank buying with it. We've known that for 5 years, haven't we? What would push silver over $100 in the
so and I think that's the icing on the cake. But what I'll tell you is, when I speak with institutional investors and we help them hedge, which is primarily the role of a derivative strategist, the one thing I get a complaint about now is it's really difficult to find hedges when essentially anything on the S&P is a bet against AI in some way, and they don't want to do that. So they think about, well, what's the barbell that gets me protection to maybe geopolitical right? That's your knee jerk to anything has become gold. So there is this valid reason of, I don't want to be implicitly somehow saying I'm against the AI trade when, you know, I think most people are in the camp that this is a secular growth story. I think this is why it's become this kind of knee-jerk go-to place for anything scary, a Greenland, a Venezuela, a Taiwan. That's why I think, you know, there are the valid reasons, but there's the icing on the cake too. Right.
And so it'd be nice to get back to what all this says about the S&P. I don't know whether we're talking about all the tails wagging the dog. I don't know whether you have a feeling of the S&P, but you just mentioned Greenland and Venezuela. One of your other concerns is that we haven't really had a screw up geopolitically. I mean, Venezuela was beautiful. Iran was beautiful, the way it worked. Doesn't always happen that way, does it? There was an Afghanistan that I remember that wasn't quite as deftly handled.
Well, that's what I get asked about, which is, you know, we've sort of had these well executed situations. So when you look at the pricing of volatility, all these future potential geopolitical potholes, they're not really priced as that severe. And part of the reason is people really have a memory look back period of maybe 1 or 2 years, and they go back and say, well, that went fine, this went fine. You look at the volatility, it didn't really move. And so the question I get from investors is, but what if we just have a misexecution? You know, say nothing of, you know, where you stand on whether or not it should happen. What if it just doesn't go well? There's fallout politically, there's fallout from casualties. Then how do we price those?
Even when it goes well, it doesn't help Trump. So I don't know how, even if it went really bad. I mean, think if any of those things had gone badly, or if the market wasn't at new highs. He's got a 30% approval rating or something with everything going right. So think if something doesn't go.
So I'm curious if, like, my question is, if things hadn't gone well in terms of the execution in Venezuela, would that have priced into the S&P or would that have not? And I think that's a question that's debated with myself and a lot of clients, meaning like the volatility is very smooth because of where we sat, but you know, could we risk a VIX over 20 to 30, 40, which you've seen in many debacles, like for instance, like debt ceiling prices, right? Like you've seen those for domestic issues. Could they happen for international issues as well?
I think retail is a big reason that silver reached over $100. No doubt, man. No doubt. Right. What else do we have? We have another clippy clip, but first let's get back into the chat a little bit. Candyman still carrying the weight of the team here. Candyman, the only one supporting the channel today. Due to the awful weather conditions, I asked for 80-year-old neighbor if she needs anything from the store. She did, so I gave her my list too. No point, both of us going. Well played, sir. Well, that was a good one. That was a good one. I'm going to try that in real life. Hey, man, you need anything from the store? Here's my list. That's nice. Kids, what's up, man? Imagine buying River at the top. Sheesh, you would be, yeah, no kidding. But River might be a good buy at the bottom, though, right? Nice volume bump on Wales, from Wales on ZBEC. Yeah, it's down 15% right now, though. 15%. It's getting close to losing a zero. That would be very, very tempting. Gengar's in the house. Crypto J 505, 50 push-ups inbound. Let's get it. Get those gains, man. All right, we got another clippy clip here from Kathy Wood. She says she just urged everyone to sell their gold and buy Bitcoin before it hits $1.5 million. Listen to Kathy Wood, not financial advice, guys, but check it out.
What I said in there is gold is probably riding for a fall because the last 2 times it was anywhere near this was in the massive inflation, so double-digit inflation in the 70s, early 80s. And before that, the Great Depression, when gold, well, the dollar was devalued in gold terms from 20.67 to 35. That's a 70% devaluation. That's like emerging market kind of devaluation, right? Back in 1934, January 31st, 1934, The government confiscated private gold, didn't allow any more private ownership of gold, and money supply collapsed. Now, we're not in anything like either of those two worlds, and yet gold is where it is. I think if I were a betting person, and I can't give advice necessarily, but I would make a shift from gold into Bitcoin, because I do think the knocks on Bitcoin in the last year have been stable coins are taking some of the role that Bitcoin was going to play in emerging markets. That's true, but that's not forever. That's just for the equivalent of a checking account. When they want real savings, they're going to buy Bitcoin, we believe, especially if it's a $1.5 million price target in 2030. That's our bull case.
God, can you imagine, guys? 2030. 2030. That's 4 years from now. $1.5 million Bitcoin? Wow. Can you imagine if she's right? That's why I don't sell my Bitcoin, guys. That's why I don't sell my Bitcoin. That is crazy. We have this from Zebek, right? Another new partnership announcement. They're excited to integrate with Remittance Hub and welcome Durav, can't even say that name, co-founder and CEO on Future of Money. So they do have another episode of Future of Money here. I will make a video covering it later today. I'll probably release it tomorrow morning. So if you want to watch that and the new integration with a new partner for Zebek, keep an eye out for that tomorrow morning, probably 9:30 a.m. Central. I'll drop that. So yeah, big news from Zebek there. We have another I was going to say another clippy clip there, but you know what? Let's go back over to Squawk Box again, because we do have bank fears that crypto will destroy them with one regulatory change are overblown, says Patrick McHenry. Now, we love Patrick McHenry because he was one of our only allies when Gary Gensler was attacking crypto, so in Congress. So let's check it out, guys.
In focus in Washington, Trump administration officials meeting with industry executives following a canceled vote last month in the Senate Banking Committee. Today, crypto firm Ondo is hosting an event right here in New York City. Joining us is Ian Debode. He is Ondo's president, and Patrick McHenry. He is the vice chairman of Ondo, as well as a former congressman in Washington. He was the chair of the Financial Services Committee. We used to have you on with that title, Patrick, and it's great to see you, sir. So thanks for joining us. So tell us what's going to happen today. What is this conversation, and where are the fault lines?
Yeah, it's our second annual summit. We have about 400 industry leaders, blockchain executives, TradFi executives, all joining to talk about, what's next, both for Ondo and for them. Tokenization is in focus. It's been a very hot topic, and we're going to discuss what the roadmap for 2026 looks like.
So look, this piece of regulation that is sort of up for grabs right now.
That's right.
It seems to me the fault line, and I'd love to hear what Patrick thinks about this, is between the banks, effectively, and the crypto world. And you have people like Jamie Dimon and others. There's a anecdote in one of the papers that Jamie Dimon, told Brian Armstrong that, he was, I won't even use the language. So, but it all relates ultimately to either loyalty points or effectively providing the equivalent of an interest rate on some of these crypto products, and whether that should be allowed or shouldn't be allowed. That seems to be the fundamental issue. And then what does that do to the banking business or not? Patrick, as somebody who's lived in this world and thought about regulating it for a long time, what do you think the implication is?
What does that mean, Patrick?
We are having a little technical, but so I'll ask you the same question.
Or he really wants to give you a good answer.
And say he needs to
one
think
or the
about
other,
it.
and he's really...
He's thinking it over.
But what do you think, for real? Who's right?
Well, it's a very interesting debate, and it's interesting that it's coming up now, and it wasn't really during the stablecoin bill itself. I think, obviously, both sides have points. From our perspective, from Ondo's perspective, we already tokenize actual treasury funds, and they pay out interest to users. We do it both in the US and outside the US. The stablecoin-like product, the one that looks a little bit more like a stablecoin, currently is only outside the US. And I think what's going to be very interesting in this entire debate is do we end up in a situation where people outside the US can very easily earn yield on their holdings, but then people inside the US cannot? And I think that's often overlooked in a debate around this bill, is how competitive can the US be in the US
Well, I
market?
think there's two issues. I'll speak for, I won't speak for Jamie Dimon, but I think the banking industry issue is this. If you want to be a bank, go be a bank. Be regulated like a bank, and have to live with all of the rules that banks live with, or not. That's sort of the that's number one. And two, I think there is a genuine view that actually you could, that if this succeeds in its own way, which the banks would say is not as safe, it also destroys the banks, and not so much just destroys the banks, and that's okay, but actually creates an actual problem economically in the country because of the amount of money that can ultimately get loaned out. Those are sort of the two biggies.
Yep, I agree. But then at the same time, we've had money market funds since the 70s, and banks at the time absolutely hated that too. So I think it's just a continuation of that trend that we've seen since then, and whether banking or not goes down just because of stable coins. I mean, quite frankly, that's quite the thing to say. And the expectation of the growth of stable coins that implies, right, I personally find very extraordinary.
Hey, Patrick, can you, I don't know, we lost you on the audio portion, but I don't know if you had audio and could hear us.
I could not, but I get the general gist here.
I'll repeat it. We're just trying to get at this fundamental issue, which you used to regulate yourself, which is the banks say, look, if you guys want to be, if the crypto world wants to be a bank, God bless, but go be a bank, be regulated like a bank, live with all of the features and regulations that exist in the banking world. And two, in success, meaning if the crypto world succeeds as much as I think you probably hope it does, it ultimately could destroy not just the banking system, but the economic engine behind the country, which is to say the loan volume would shift materially, not just that it would shift to crypto, but that there actually would be less loans because there'd be less treasuries available.
Well, people would just have to get their loans through crypto then. They just wouldn't get their loans through the bank. People are already taking loans out through crypto, first of all. Second of all, it's an oversimplification to say if you want to be a bank, then just be a bank and live by the rules. Crypto exchanges and crypto are not banks. They're not trying to be banks. They're something else, right? Just because they're going to be offering yield on stablecoin doesn't mean that they fit in the mold of being a bank because they fit one parameter of lending, right? Doesn't work that way. It's a massive oversimplification, in my opinion. And you're absolutely right, Carl. They're scared, right? And that's just the long and short of it. Candyman, I'm looking forward to Saturday too, my friend. Absolutely.
So, okay, let's unpack this. So the banks are fearful of a new technology. That's not new. This is the same discussion with money markets, just as Ian said, and with ATMs. Don't forget that ATMs were about deposit flight. So there are two things that can stand as true. That when you have a tokenized money market fund, the economics of that may be more conducive than non-tokenized money market funds. That's where Ondo sits. You also have stable coins. Stable coins could have the same attributes where they give you rewards, just like credit cards give you rewards. And so the question here is whether or not you can get a compromise that garners sufficient votes through the Senate Banking Committee. And that means that TradFi and crypto have to cut a deal on this question of yield. Standing in the middle of that is Coinbase leading the effort. They have an economic model that is with Circle. That is at the center of this debate and center of the concern that banks have on this debate. But I do think the banks have an overblown concern that crypto is going to destroy them by one regulatory change that enables people to get something back for having money, their dollars, stored as a stable coin. A stable coin is meant to be a means of exchange, a payment instrument, not a store of value. And so I think there could be some reasonable compromise between banking and crypto that preserves some level of rewards, but doesn't actually result in massive deposit flight like the banks are driving right now, that discussion.
Right. Can I ask you a separate question? And maybe you can speak to this. We're looking at cryptocurrencies, which are now materially lower than they had been in quite a while. You're looking at Bitcoin now at $78,000, for example, Ether at $2,200. Is there an invisible line when you think about the leverage in the system, in the crypto system, where things start to break?
Well, I mean, the interesting thing is crypto typically has always broken at some point in the 4-year cycle, right? It's just an incredibly volatile industry. We saw a deleveraging event happening in October. Prices have since been depressed. That trend has continued this year. But interestingly enough, not the entire sector is down, right? The crypto assets are down, but the tokenized assets are up. And I think what you're starting to see is as more tokenized assets, stocks, ETFs, money market funds, stablecoins, et cetera, get introduced into this crypto environment, people just have more choice in what to invest in. Right. And I think you're starting to see some people that, had FOMO for the gold rally and sold some Bitcoin, invested into gold, invested into silver. We're seeing that in our own trading information as well, where people are starting to sometimes sell cryptocurrencies and put it into Google stock, Nvidia stock, all happening offshore, to be clear. But that trend of people just having more investor choice and all these assets living on one technology layer, being the blockchain, that does present some challenges in terms of what crypto now is competing with.
Yeah, banks, crypto's not trying to be banks at the end of the day, guys, right? A little bit of a bounce back here on Bitcoin right now. Michael says, I'm already using Bitcoin loan and love the Patreon, Rob. Appreciate you. Hey, thank you so much, man. I appreciate you too. Hybrid Dad says, despite what's going on in the markets, it's still a good day to be thankful for that God has blessed us with. Yes, amen to that. Jesus is king. I agree 100%. The banks need to match the interest rates the crypto companies are offering, and they'll be okay. They're too greedy. Exactly. They don't want to cut into their profits 100%. They could. They don't want to, right? You wouldn't buy any Civic. It's not that I wouldn't buy them because they're not good projects. I wouldn't buy them because they have lower to go. So that's why I'm not buying them right now. But yeah, for now, guys, we'll keep an eye on it. Bitcoin has reclaimed 75K for now. We'll see what happens. I will be back tonight, 8 p.m. Central. For now, I got some coaching sessions I got to do over on the Patreon. Get over there, guys. Check it out. The link's in the chat. It's in the pinned comments. It's in the description. If you don't know what's going on in the market, if you need a plan, get over to the Patreon. Book a one-on-one coaching session with me. Let's have a look at your portfolio. Let's have a conversation. Let's get you pointed in the right direction. Let's get a plan in place for you here, guys, okay? That's the most important thing right now. Get a plan in place. We drop microcap gems over there, daily trades, 10 different chat rooms, and all kinds of other stuff, exclusive Patreon-only content and lives. The link's down below in the chat, in the description. I'll see you guys in the next one. God bless.